Yeah.
Welcome back to Sparking the Fuse. Today I'm joined by Josh Greenbaum, founder of CFO Minded and author of Numbers Scare Me and Other Excuses, a business owner's guide to lead like a CFO. Josh has helped founders across industries transform anxiety about money into clarity and control, using practical tools like rolling budgets and 3-minute financial reviews. He's redefining what it means to think like a CFO, even if you're just a team of one. Josh, welcome to the show. Thanks for coming.
Thank you.
Yeah, I'd love to start with, you've been in this now 17 years. What first inspired you to build CFO Minded?
I have always loved small business, and coming out of PwC, I saw the big brains and the compliance work and all that goes into what it takes to run a big business. And, for the cliche, I didn't enjoy being a cog in the wheel, and I didn't see a career path that was going to lead me to that would be fulfilling. And I found small business, and my reflection back is how much I really enjoy taking that big firm experience and knowledge and offering that to small business. And I think in the bigger picture, they're the ones who need it.
Yeah. No, I saw something very similar with my track in finance, where you see the tools, the knowledge, the specialization that big companies get to have because they can afford it, that I guess let's call it the lay person just wouldn't know about. And so it takes people like you and me to go down into those companies and say, hey, this actually works really well and you should implement it, right? You can use it too.
Right. And, to go back to some recent times in the past, it could be something as simple as securing, a COVID loan that so many people are getting, when at the end of the day, you're still obtaining debt, you're going to have a debt payment, and you need to have a plan of what you're going to do with it. And I saw so many people take the money and money's gone, and they're all looking back at, how much do I owe and for how long? And so it doesn't need to be complicated, but it is that sophistication of, hey, you're doing X. What are the repercussions of that? What do and to really be there to challenge owners and to be a little thought provoking and push them on their ideas.
Yeah, no doubt. Like when you think back to this and when you were starting this out and maybe even now, like what gap were you seeing in how small business owners were thinking about money? Were you trying to address?
I would say one of the biggest things, the first thing that comes to mind is really kind of the like money in, money out mentality, and almost that mistake, let's call like a single owner consulting firm. That mistake of someone going in and thinking, okay, I want to make $200,000. I'm going to leave my job. I'm going to go make $200,000. So they price according to $200,000, which, if that's what you want to get paid, you're not making $200,000. You have costs associated with that. Not only that, you're then a break-even business at best, so you have no profit. Not only that, if you lose a client, what is your sales process to get a new client? And I think that, and not hating on it, but that kind of elementary thought around starting a business is where people get tripped up. And once you get going down that road, it can be hard to pivot.
Yeah, I've seen that, and I've unfortunately had to go through some of it myself too in my own
As we all
entrepreneurial
do.
journeys. Yeah, and so chalk it up to learning. I'm like, hey, that's the MBA of hard knocks if you didn't go back to business school, right? Yeah, I love that. I love that. So with what you see now, what's been the biggest shift you've seen in how founders relate to their numbers?
I think it's getting back to the core of what's your business model. And in parallel to that, I think I really try to introduce a conversation a lot of also like, what do you enjoy doing? And of course, I'm speaking very small business here, but I'll give you an example that I work with a company in the beverage industry. and they've been very focused on legacy and building the brand and sort of the impact the brand will make and putting that ahead of profitability. And that's obviously required a lot of dollars and financing opportunity or strategies to implement and put in place to continue funding the money. But to then have a portfolio of beverages and some are losing money and some are making money and the sort of complex nature of it. And then to again remove, or I should say to challenge or to devil's advocate that founder, that owner, and say, what is the plan here? And if legacy is your plan, that might not be a good business model. So, there's a lot, and that gets into sort of the relationship with money and things of that nature that have to be tackled sometimes. And I think embracing that human side of business is not only where there is so much value, but I also think that that's where the CFO world needs to transform to and is starting to transform.
Yeah. No, good point. I like the first point on that other question I had asked you, um, what you thought, and people were like, "Hey, I want to make $200,000, so I just have to build $200,000 of business." I was like, "No, you just bought a job. That's what you did. You bought your old job back. You made it harder, actually, because now it doesn't go to sleep when you left the office, right?" And then after that, it is, yeah, being able to relate more to the numbers. You talk a lot about rolling budgets and
Yes.
making finance feel accessible. Can you kind of describe that and the biggest mindset block you see owners hitting?
Yeah. Well, I think the thing that we all know about budgets is they usually get made and then they get forgotten, right? So
Hmm.
for me, I like to really take, if it's ideally a September, October timeframe, and we're going to build a budget for the coming year. So let's call it the 2026 budget. To me, we're then going to lock it down. So that becomes my locked budget. And from that, take that detail and throw it into the rolling budget. And the idea with the rolling budget, and for those who are accounting and finance folks, you're very familiar with this concept. But all I want to do is engage with business owners each month and just talk about the next 3 months coming up. And and the 3 months is a little arbitrary, but the idea being that you kind of just know what's coming up, you know what you want to accomplish. Maybe I want to hire somebody. Maybe I need to invest in a software package or and then to be able to dialogue around that and say, you know what, maybe we do it in June instead of May because of cash flow, or you're a retail business and you need to be able to invest in your inventory and deploy cash for that. So the rolling budget is then that opportunity to specifically dialogue. And for me, I like to really carve out that time to have that conversation and let it just be forward looking, separate from reviewing financial statements. And and I've just found that focusing on that short term and again making it very light and easy conversation and very non agenda driven is really the best way, because at the end of the day, your P&L, and I'm getting a little in the weeds here with accounting terms, but your income statement, your P&L is really like that's your agenda. And great, let's talk sales and marketing. What's working, what's not working? Are you happy with your firm? Why are you spending so much on Facebook ads? Are they converting? What's going on with the algorithm? Like you can become so much more dynamic in the conversation and really get hands-on within an organization when you sort of allow that consistency of each month of inserting yourself into the business that way and truly being part of the executive team.
Yeah, no doubt. Yeah, you bring up. I'm thinking about different types of business owners. Some where they are comfortable with the numbers. Like, let's take someone like you. If I said, "Hey, Josh, go out and start a rockin' lemonade business," you're gonna come at it from, I think, a very logical, like, approach to it in terms of like, "Hey, here's my costs. Here's the revenue I gotta get, and here's the moves I'm gonna take because of that." Then you have like the super creative who's just like, this is all about the feel and the vibe that people like, the experience they have when they taste my lemonade, and they come from that point, right? Do you see any other type of business owner? Because I'm just kind of like simply making that Like, hey, logical thinking, numbers, not
Sure.
numbers avoidant a lot of times on the
Yeah.
creatives and the people who are really comfortable in the numbers. Um, I I honestly have kind of both of those in me where I've started businesses and it's just kind of like, hey, I do sales, right? I'm going to go out and sell. And the only thing I need to know is that I got enough sales coming in and the rest will take care of it. It's like a oversimplistic way of saying like sales hides all sins. You just put more in the system, you're good. You
Yeah.
can figure out the problems, you just pay for them to be solved, right?
100%. And, to comment back on those two types, and then I'll add a third type.
Yeah, please.
With those two types, I think, again, with the role of the CFO, it's to really understand in a simplistic way what drives the business. And for me, what's been helpful for, in particular, those highly creative types, and one of my clients is a comedian, so he fits perfectly into
There
that
you go.
creative type, is to speak very elementary around contribution margin. Great. Like, merch is less profitable than comedy shows. Got it?
Get
Okay,
more
you got
comedy
that.
shows.
Then
But right.
therefore, what's in control, what's not in control? Look how much we have to spend on ads to drive merch, which is not driving us a lot of money. Do we really want to continue that? Do we want to come up with a new shirt every month? Or should we just standardize to 3 different designs? And so I like to lead those conversations for whether they be that financially minded or not financially minded person, to just understand what drives their business, and how does it work and where do they want to put their effort.
Yeah,
And
talk about lessons of the past. You're bringing up my like old nightmares, which is like I'm talking like first business back, 10, 15 years ago. And it's like, ah, if I only just get this logo right, like this name on this, like thinking about your comedian, like, I don't like the way my picture looks. And it's like, bro, step off of it, go book some shows, please.
yes,
Like,
exactly. We
there's
pay
no
your
business
your
tomorrow if you don't
10%.
have shows.
It's
Go make
much
people
better.
laugh, please. Yeah, totally need
And
like that.
so I want to offer a third type too. To me, the third type, and there's no criticism in this, but the third type is the burnt out business owner, where I have a client and she's been in business for 20 years, and she's kind of over it. And what I think is important about that business owner is to really own that decision, and to really think about, then, how do you replace yourself versus forcing yourself as the figurehead, and that's a very acceptable place to be too.
Man, I can relate to that side too. I've seen it up close with other friends and their businesses as well, where it's like it's lost that luster for them. But then part of me asks like, well, if you had like 10 times more sales right now in your business, would you still be like lackluster about it? Or if you did that, then you could probably buy like someone's time to be able to work in your business and put them there doing the
Yeah,
stuff you
or is
don't
that
like.
more people, more headaches? Or,
Yeah,
even to
possibly.
speak, yeah, and to speak to myself, being 17 years in, I'm really pushing myself to put on that entrepreneur hat a lot more versus the CFO hat for myself, and to think about, how do I even want to balance bookkeeping services where my team handles that versus CFO services, in that I have creative things that I want to do within the business. I want to drive the business. I want to be, out there and kind of being the salesperson. And I need to balance that time with client service. And therefore, I really need to think about, again, going back to marketing and sales, of what's my call to action and how do I want to drive people into the bookkeeping side, and allow that to be a growing part of the business and be very intentional.
Yeah. No, I love that. If just terms of talking about financial clarity here for business owners, like if you could give every owner one 5-minute habit that changes their trajectory, what would it be?
That's a great question. So, the 5-minute habit would be that, I think what's really important is, I'm going to speak in the weeds and I'll kind of come up to a very macro level. So you have the chart of accounts, which is your organization of all the accounts that make up your financial statements. And what I do with all my clients, and I think is insanely valuable, is to bucket these accounts into the categories. In QuickBooks and most accounting system, everything starts in alphabetical order, which is not helpful for anyone. So to bucket things into revenue, cost of sales, sales and marketing, personnel, office and facility expenses, and others, but like to these big buckets, and allows you to look at financial statements at a very high level and not get so lost in the weeds. So to speak to kind of my 3-minute financial review, it is to stay at that high summarized level, look at the prior 3 months and just kind of look at it and become comfortable with it. And that to me, I think is what's most important between the familiarity. So you get a sense of kind of what does my business cost to run? And then what are the nuances? Do you have seasonality? Do you have, different times that you need to allocate cash and capital? And then in the bigger picture, what do you even want as an owner? Do you want to grow this thing and sell it? Do you want to put an operator in place and step back a little bit? And so those are the kind of 5-minute easier things that I would do and take into consideration.
Yeah, I think a lot when I ask that question a lot about the numbers avoidant type of owner where they don't want to see the numbers. Like
Yeah.
they're just so like avoidant that it just I don't know. I just need to make more sales and let things
Well, and
take care
to
of
that
itself.
point, I think a question that is generally not asked and not thought about, and it's not even particularly related to the business itself, though it impacts it, is like, what's your bigger plan as the business owner? That element of retirement and stopping work or scaling back work, or that's something to really consider as well.
Yeah. No, I like that. I mean, I've met so many people who basically consider themselves a reluctant business owner, where they kind of fell into it. A lot of them feel like they are now that is all that they can do because to go back into the workplace would be like starting over again. In a lot of ways, it would be obviously, but finding a way to actually like have something to work towards. So if that is this is a legacy business, I'm building it for my kids to take over and their kids and everything. Do I want to try and just you know push the accelerator right now and get out of this thing in the next 3 to 5 years and then make some good investment decisions, right? That definitely has a different way of how you come to work for sure.
Yeah.
When business owners hit these like kind of financial plateaus, like, hey, my business is making $1 million and I just can't get over that,
Yeah.
and they just kind of like plateau, like what usually causes that? What do you see,
Sure.
like being a numbers guy?
Yeah, I think generally speaking, it's always people cost. And again, that's not a negative. I think that that's the reality, that once you
The
start to
people
hit
cause it.
the people cost, the expense
People
of
cost.
people. And
Got it.
it's that as you start to hit certain revenue levels, that you have to, assuming you're self-funding, you'll have to kind of invest ahead of that revenue at times. And that's squeezing down your bottom line. And so therefore you hit these plateaus. And therefore, I think what becomes important is doing that 3-year model, and to really think out. And so to speak to like, what's the value of the 3-year model? Because I think the answer that everyone will say, or the response that everyone will say, including accountants, is like, yeah, but we're just making assumptions. We're just guessing. And that's fine. But it's an exercise in thinking about, where do you want to go? And to understand, if I hit 1 million, that might be painful. I actually need to get to 1.5 so I get the bottom line that I want. Then, do you have the desire to get to 1.5? Because the wild secret in all of this, and I know you see this too, is that a $600,000 revenue business might be more profitable than $1 million revenue business for that reason.
Yes.
And it's
Yeah,
very
depending on your
intuitive.
structure, certainly you're
Yeah.
totally right.
Yeah.
um So a lot, like when you say people costs, we're talking about let's say we get to that $1 million and you get stuck there. A lot of times it's because, hey, there's an investment to be made, and this investment is probably going to mean that you're going to squeeze your margin a little bit. You're going to take a small step backwards to make hopefully large steps in advance, but there's a potential fear factor there too, right? Scarcity. I think as any business owner is like, you know how long it took me to achieve 100,000, and now I'm at 1 million, and you want me to go down to like 700,000 profitability again? And it's like,
Right.
yes, we do. Yeah, we do. And that's kind of funny. Like with, you with your, you have the full picture now, but like your accounting background, and I started in finance, and it was like very forward looking in finance, very backwards looking in accounting. Now where you sit, it's yeah, full cycle, full picture. That's some pretty cool insight. Um,
Yeah, and again, I think to like lead with a little piece of food for thought is when you're hitting those moments, I think as the leader of those organizations, you have to really think hard about what are you great at? Are you a sales? Generally, I think CEOs are financially minded or marketing minded, sales and marketing minded. And so which one are you? And to throw a third in there is operationally minded, because as you grow, the need for process, the need for people management starts to change. And so again, what are you great at doing? What do you enjoy doing? And how can you supplement that within your organization?
yeah, hiring out those parts, that's how you can do it, right? Because hiring out your weaknesses, I was talking to a good friend of mine who was telling me his horror story of, having to buy out a partner, because I think they're too similar, honestly. Like they are both on the same track, and it's like, well, you have the same weaknesses too then. So like you didn't really address that in your business, and now you're plateauing, right?
Yeah.
Very interesting.
Partnership is hard.
When revenue starts growing, so let's say we're in a stage where someone's like, "Hey, it's time. Like, I put some gasoline, and this thing's catching now." Where do you see like the most money quietly leaking out in those situations?
Um, Wow, that's a really interesting question. I think that it can leak out if you don't have good controls around like software costs, kind of the meals and entertainment. Are all of a sudden, do people have their own credit cards? Are
Let's
they
go.
signing up with their own Dropbox account instead of tapping into the corporate Dropbox account that you have, or Adobe, or whatever it may be? And then all of a sudden, who has password control? I think that that kind of that's where leakage could really occur, and then it's death by a thousand cuts of $100 subscription times 10 times 12 months. All of a sudden, it's not much, but it becomes something, and it's a lot to
Yeah.
control.
No, I love that. Yeah, I think it's in those ones where revenue starts growing quick, or I also see it in a lot of startups when they're like in scavenger mode, just trying to survive, and then they're like trying to raise money at the same time. They raise the funds and they're like, "We made it," and
Right,
you're like,
everyone's getting paid.
"No." It's like you're like celebrating taking on debt, dude, or equity, like from whatever kind of uh structure they have. But I'm like, no, dude, now you got to actually freaking work way harder.
Yeah, and you got to answer to somebody too.
Yeah, now you have a boss's boss.
Yeah.
Um, you have mentioned accountability being a growth hack. Like, what structures do you help founders put in place to stay accountable?
So to me, and this goes back to the book that I wrote, "Numbers Scare Me and Other Excuses." The motivation behind the book was, I felt like often every time I'd go in and sell, the owner is hating on their current bookkeeper and complaining about them in whatever regard. And for me, it's the accountability of understanding financial statements. Do you know what they mean? Can you ask questions around it? The For how imperative it is that a business owner not be an accountant, but understand accounting, to not be the finance person or lead budgeting, but understand the value in doing the exercise. And to me, on the point of accountability, that's it. As CEO, you have to kind of become a little bit good at everything. Not that you're supposed to be the expert at everything, but to know what to ask for and to know what you need, and to no different than any other department within your organization, but to to get those reports.
I'm just interested, and this is just a curious question for you. Like, since you're a business owner as well on this, like, as your client base scales up, you're growing, like what parts of your whole thing break down first?
The thing that breaks down for me has been my weakness has been process. And the reason that I've identified process as my weakness is, speaking back to the longevity, is I was really young when I started my firm. And for the first 10 or 11 years, I operated by myself. And I've become very comfortable and just, I know how to do this.
You wear all the hats.
Right.
Yeah.
And enjoyed all the hats too. And I also didn't have a long time in corporate America, and I didn't really ascend through, okay, now you're going to manage people, then now you're going to, et cetera, et cetera. So that, to me, through growth, that has really been my hardest part, is what are the best ways to kind of organize and operate, um, and break my own habits.
Hmm. Yeah, thanks for getting a little vulnerable there. I'm always curious on like people's systems because um I kind of see it really as a almost a simple triangle myself, where it's like marketing, sales, operations. Marketing, sales, operations is like, okay, if I turn up the marketing and I get more sales, like when did operations break? It's like, and
Yeah.
what do I need to tweak there? And do I
Yeah.
need to turn this up or down? Is it not working right? And I kind of oversimplify a business a lot of times like that, and just see what makes sense and what doesn't. But it's always interesting to hear what other people, how they see their business. Um,
One of the things I've always been impressed with with my peers, with our peers, is those who, and this is not a comment exclusive to kind of the financial world, but those who start their own business and can think very entrepreneurial from the get-go. And I think that's something, if I were to do it again, that I would start differently. I would start from this place of, I'm the figurehead, I'm the CEO, I'm the founder. I'm not, and I'm speaking in kind of generalities, I'm not the doer, I'm not the worker. And those who start from that place, I think, have infinitely more success. Almost back to the $200,000 example of, you just bought yourself a job. And when you buy yourself a job, all of a sudden people love you, and then referrals come in. It's like, man, you got to work with Chris. He's the best. And you
Chris
kind
only
of
has so
have
much
to
time.
come to your own design.
Right. Yeah, I think that speaks a lot to not not exclusively or and not all the time to the consulting model, where, hey Josh, you're the expert, like I want your time and I want you to address my problem and you know how to do it. And so you can fall into a place of, okay, I do have to do it all myself and they're paying for me to like help them, so I have to either charge more and more and more and more for my time for it to be worth it to get to my financial goals, or I can build a system to address it. Just because I know how to do it doesn't mean I have to do it. I can do it sometimes, sure, but I think that's really like mature insight that you've had for sure in your journey. I like
Well,
that.
one of the pieces of advice I received early on that I was very reluctant to accept for a long time, and this is speaking kind of to the consultant population, is
Mm.
don't name the business after yourself, because it presents problems. It presents a problem, as to what we're just discussing, is there's kind of an expectation that it's you. So that's problem number one. Problem number two is, if you want to sell the business, it's kind of a little less valuable if it's named after you versus, a generalized business name. And for me, and I didn't change the name of my company to CFO Minded until maybe 11 or 12 years in. And what was great for me with that exercise of deciding on the name, to make up the name, was then the branding exercise that went along with that of what is this name? What does it mean? What are the ethos of this versus me? And to start to remove myself from it was a really interesting exercise. And again, advice that I just ignored for many, many years.
I love that advice though, man. Like I'm totally with that too. I never wanted to name something after myself to like because I wanted to be able to scale up. But I even look at accounting firms, look at law firms, and it's like Jenkins and Jenkins or whatever CPA, right? And you're like, but when I go there, I talk to Jim, and he doesn't have that last name. Am I not good enough for like the founder of the whole thing? You know what I mean? It's
Right,
pretty funny. That's pretty
right.
funny insight. I want to talk about like the your thoughts on like things like AI, automation, all that. What you see coming down the lane for that, for your business, for your clients' businesses. What are your thoughts?
I think I'm a little bit of an anomaly. I'm a little anti-AI.
Yeah, let's hear it.
Um, I think that there's so much value, and I'll first speak to the bookkeeping aspect, and then I'll speak to the CFO aspect. From the bookkeeping aspect, I think that there's such a value in seeing the transactions and kind of knowing what's going through the business and having that familiarity versus just letting AI plug everything in. And and again, not a very popular answer. I'll caveat that with I use a lot of plugins. So for example, a wonderful company called Bookkeep that integrates Shopify into QuickBooks. So it's not that everything needs to manually be done by hand, but at that base level to really get a sense of the transaction flow, the money timing. To go back to the comedian, he gets YouTube revenue that comes in and whatnot. I know that that comes in around the 20th. I would not know that if I'm only looking at monthly financials that AI is plugging in. And that's really important when we're having maybe a slower month and I need to know when money is going to hit. Is going to hit this week or next week. So you have that value on that side. And on the CFO side, there's, I guess, the potential with AI to start doing the analytical work. And I just don't feel like it's a strong substitute for having conversation. And it's just too easy to start to automate that and then send out a financial package to a business owner and no one ever looked at it, you know?
Hmm. No, I like the comments you're making on it. I wonder if I was to say to you, would you see it differently if instead of not talking about AI as a replacement to bookkeeping or replacement to advisory services, that it was more an enhancement of like, Josh, the questions to ask that would actually like make headway for a business, but you
So
have all the information from pulling that AI has pulled and put in front of you to be able to make those smarter ones. Where me as a business owner, let's say I'm the creative type, and I'm like, freak, I don't know what to ask
sure.
it.
I
Like,
think I think that's a wonderful point, and I'll give you a great example of how I have used AI. I in building financial models for businesses and those financial projections to use AI to start to do market research and to get into that side of things of, excuse me, if it's what is the cost of manufacturing, a widget, and to be able to utilize AI to quickly spit out what are the costs, what are the supply chain, whatever it may be, or things around that's where I would definitely lean into it.
yeah, yeah. I had a fascinating conversation with someone just recently about uh, robotics, automation, stuff like that in warehouses, and really his approach was it was another episode that I had filmed, and he was talking about the approach where it's like, hey, if my stuff didn't work with automation AI stuff on this, like the default is you still have someone operating the forklift, like they are fine. We're not looking to replace them, we're looking to enhance them, and I think that's the brand of AI that I like best. I know some people want to go full automation, full bonkers nuts, and I think there's certainly industries that are going to be ripe for that, and that it would be well served to.
Yeah,
Other ones, yeah, when you're talking complexities of businesses and how they operate in general, there's so many moving parts that it's like, I feel like the general tide of business owners I've spoken with, it's like, how do I implement AI in the way that's going to be best for my business? Um, some have a fear of, well, what is Jim or Susie going to do if I implement this? And my response has many times just been, well, is Jim smart? Is Jim and Susie, are they good workers? Like,
yeah.
yeah. Well, what can we do to elevate their experience and enhance what they do then? Because they're valuable people, right?
100%. And it may not be exactly what you're getting to, but I think that that starts to even speak to brand. You could be a cost cutting race to the bottom commodity, or you could really be a premium service and lead with people.
Yeah.
If you're an
Dollar menu,
organization
man.
that, yeah, and if you want to be an organization that is premium and prices at that level, that sure, there may be AI tools through scheduling or a chat bot or something to that nature that could really supplement, that's fine. But to think about brand within the kind of customer client experience, I think is really important to consider as well.
Yeah. No, I agree with you 100%. And I love, you know, when you talk about AI more as like almost like ideation, where you're like thinking of new things or researching out things and fleshing out stuff quick so that you can actually have actionable information to like say, okay, I get the basic gist of this. Let's make some decisions now. That's what I like in implementation too. Um, Let me see. Well, wanted to just do a little quick round here to finish up with you. What's the number one thing every business owner should look at weekly?
Every business owner should look at cash weekly. Just make sure there's no surprises of money. We'll just call it money going out.
Okay, I like that. Um, what's one thing that a business owner can stop worrying about that won't move the needle?
Little ticky tack like travel, office expenses, things like that. Like just you got to think bigger picture and get the advice I heard is you should be in make a dollar mode, not be in save a nickel mode. And I think that
I
that's
like
that's
that.
the essence of it, of like,
What's that saying?
sure, like you don't want to waste money, you don't want leakage, but let it go. If somebody wants to go out for a coffee and put it on the card.
Yeah, just do it. Um, Yeah, this has been a really fascinating conversation with you, Josh. I appreciate you coming on. If people want to reach out to you or look up what you're doing, what you're working on, like what's the best way for them to get a hold of you?
.com. It's the best place to go, or find me on LinkedIn.
CFOminded.com.
Yep.
Awesome, man. Thanks, Josh.
Thanks, Chris.